Good evening, trading fam. Well, we have lots of things that have happened in the market since my last video, not least of which is a massive coordinated paper attack against specifically silver. We're going to talk about the price of silver here in this video and how I trade it, what I use to trade it, what I use to determine future direction. We'll talk about the dollar, which is part of it, and we'll also visit the S&P 500, which is revisiting a major overhead resistance level as we speak. And then we'll end up with a Bitcoin, which is now visiting an important support level and also has completed a very bearish pattern that I have been discussing in previous posts and videos. Okay, so we're going to get started here on silver. And guys, what you're looking at is history in the making. This is just unprecedented to have this far of a drop. From pivot top to the pivot bottom here, we had almost a 45% drop, 44% to be exact. And that would mean, if this was in fact a true casualty in the making, that would mean that every one out of two people that hold silver would have gone to some store today to try to sell their silver. But we know that didn't happen. So this is an illusion, guys. The price of silver in Shanghai right now is $123 per ounce. And yet the price of silver in the US market dropped all the way to our 50-day moving average, which was about $73 per ounce. Um, that's insane. What is causing this kind of a drop? Well, we know that paper contracts outweigh the physical asset by some estimates are up as high as 350 to 1. This is creating a large amount of operating ability to manipulate the price of silver. And usually this is by larger banks. In this case, this kind of a move can only be made by larger institutions such as banks. Uh, Potentially and probably JP Morgan being the most culpable in this scenario, manipulating the price of silver down through canceled contracts so that they can buy the physical asset at the lowest price possible. Gold and silver, guys, liquidated over $10 trillion in less than 24 hours. To put that into perspective, the entire crypto market cap is only around $3 trillion. So that is more than 3x the entire crypto market cap being liquidated in less than 24 hours. Truly historic happening. And you guys all got to witness this today. Now, silver here, even with the crash, could potentially still come down farther. However, I happen to be one of those that bought this crash. I bought this dip because I think silver has a much further upward price trajectory, excuse me, to target. And part of what is making me understand that and know that is the price action on our dollar here. Now, guys, I brought this to your attention in past posts and videos, but we were at the bottom of this ascending channel. This is a 19-year channel that the dollar has been in. I'm going to zoom out here to the monthly to show you where we entered this. We entered this in November of 2006. So for almost 20 years now, closer to 19 years, we've been forming this particular channel through price action on the bottom side and then price action on the top side. And more recently, I've been discussing this channel. Zooming back into the daily here, for the last year or so, we've been testing the bottom side of this channel. And in fact, a couple times we broke the bottom of this channel, but never did confirm. What am I looking here with for confirmation? We'll see that first red candle, the body closed there. What I wanted to see was a second candle open below that and close below that. That would be our confirmation. But that did not happen. The second candle opened below it, but closed above it, indicating that we were going to recede back inside the channel, and that's exactly what we did. In the second scenario here, around September of 2025, we once again broke the bottom side of this channel. But our second candle, that green candle there, even though it opened below the closing of the body from the previous candle, it closed back above, all right? Proving once again that it was going to make a move to the inside of the channel, that which it did. All right, more recently, I became more convinced that we were actually going to break the bottom of the channel this time. Now, why was I convinced of that? Well, it's because of this white trend line here. Where does that come from? I'm going to zoom out to the monthly here, and I'm going to go all the way back here to 1980. December of 1983. We had a pivot top there, and then if I were to move this chart into the weekly and zoom back out, we can see more precisely why I drew that trend line there. There's another pivot top in 1985, September of 1985, that I connected to those two candles to, and it came out exactly to two pivot tops, one in June of 2001 and some body closes in February of 2002. So I just continued that trend line down. Sure enough, we can see that it was used as resistance a couple times. And then we broke above it over here. When was that? In 2022, and have been using it essentially as support ever since then. All right, so I'm going to get rid of this arrow, zoom back into the daily. And so I knew on the daily, when we broke below this trend line, it was potentially going to give us enough momentum where we break the bottom of this channel. And that's exactly what we did. All right, so I'm going to zoom in again, and I'm going to tell you where I think the dollar is going to go from here. There's two possibilities. Well, there's more than two possibilities, but the two greatest possibilities, or probabilities, I should say, that I see as we move back up and test the underside of this channel. Price often likes to do that when it breaks below a significant level, and then we continue our downward trend on the dollar. Of course, the devaluation of the dollar means it takes more dollars to buy a thing, to buy a good and service. As the dollar becomes weaker and weaker, it takes more dollars to buy a thing, and that brings me back to precious metals, specifically silver. In this case, we're talking about. I think the trend of price will continue upward into 2000 to the end of 2026, and I do think that silver will hit a high of 250 to $300 by the end of 2026. By the way, guys, I'm not alone in that thesis. I heard Bank of America, I believe, came out recently and stated something to the same effect. All right. The other probability here for the dollar is it looks like it's starting to form a bearish triangle. Should color that red so you get the idea that it's a flag, a bear flag here. All right. So what's going to happen in these flags is we tend to bounce around and coil the price inside of there as we form this triangle. And eventually we will break to the bottom side of that triangle, usually I should say, on these bear flags, and continue our trend down. So that's the second possibility I see here on the dollar. All right. Of course, as the price of the dollar becomes weaker, as I've already stated, everything gets more and more expensive. So this supports my thesis on silver. There's one more thing I do want to look at here. It's the gold to silver ratio. All right. So this is generally somewhat of an inverse chart of the price of silver. As you can see, the gold to silver ratio spiked today as the price of silver fell today, or crashed, I should say, and crashed hard. It did. Now, typically, this is what I like to look at to determine where I want to buy silver. The gold, you don't necessarily want to price the price of silver against the dollar, because that's a moving target. The dollar continues to decline, and it's kind of hard to get a beat on where you buy and sell. So we have lots of historical basis for the gold to silver ratio. And in fact, before 1933, the gold to silver ratio was always hovered around between 20 to 1 and 25 to 1, meaning that, let's take $1,000 for instance. If you had a 25 to 1 gold to silver ratio, the price of silver would then be about $40. If you had a 20 to 1 gold to silver ratio, the price of silver would be about $50. All right. So for every $1,000, you could tack on $40 to $50. So recently, gold hit a high of, it was over $5,000, but let's just say $5,000 of gold. If, excuse me, guys, you kept that historical average of 20 to 1, 25 to 1 gold to silver ratio, the price of silver really should have hit anywhere from $200 per ounce to $250 per ounce. And that's where I'm expecting silver to go. So eventually, I think this ratio, this gold to silver ratio, continues to trend down till we get to closer to those historical averages. All right. And even if we don't make it to the 20 to 1, 25 to 1 ratio, I still expect the price of silver to go anywhere from $250 to $300 per ounce this year, as gold continues its upward trend. I could see gold hitting close to $7,000, $8,000 per ounce by the end of this year. And that's only because I'm so bearish the dollar right now. And silver, I expect to do even better than gold, because, quite frankly, at this point in history, it has more utility. I mean, it's been used in solar panels, it's been used in electric cars. I think the average Tesla now has, what was it? 26 ounces of silver, something like that. Don't quote me on that, but it is a large amount of silver per electric car. Every electronic component needs it. Every military that operates has to have silver. Every nuclear reactor that powers our energy has to have vast amounts of silver. And silver backs or hedges the banks against uh, uh, you know as a form of value, just like gold does. So we also saw recently this year that China, beginning in the new year, made it illegal to export silver, and is only has a policy of importing silver, making the demand for silver go up even further. So it's only a matter of time before these this game that we see being played by banks. The bluff is called, and in fact, I called the bluff today. Bought silver at that 50-day or near that 50-day moving average. I bought both paper, which I trade, and I bought physical, more physical, which I hold. All right, so that's my outlook for silver. That's where I see silver going, and using that gold to silver ratio is how I trade. All right, when we get up, I don't think we'll ever see where we were before, which is anywhere from 80 to 100 to 1 gold to silver ratio, making silver very cheap. But I consider where we got today a 60 to 1 gold to silver ratio of good value. And quite frankly, I don't know. The gold to silver ratio could break back above that 50-day simple moving average. The inverse of that is silver breaking down below that 50-day simple moving average. And if we came down, it could potentially get all the way back down to $50 per ounce. That red line is a 200-day simple moving average. We could potentially touch that. I'm not banking on it though. I'm not counting on it. I think there is far too much demand, and I'm calling the bluff here on this paper attack on silver by big banks. All right, on to the SPX. In my last video, I drew this arrow here. We had broken down from this ascending wedge. All right, again, coiling inside this wedge, price bounce back and forth, upper, lower, getting tighter and tighter and tighter till I knew we were going to break down, and that we did. All right. And in my last video, I called that, just like Price likes to do, that we'd probably go up and test the top side of this channel, which we have been in this channel now since 2017, I believe. Looking back, yes, that is a very steep channel, by the way, 2017. So it's very significant. We must pay attention to these boundaries. Upper boundary is definitely providing resistance. So even with the dollar dropping as much as it is, making it more costly to buy a thing, including stocks, I do see a pullback in the stock market. I'm expecting a pullback at least to that 200-day moving average, which is again that red trend line there. But should we break below that, we'll go all the way to the 350-day simple moving average, which interestingly enough, uh, area of confluence there intersects the midway point of that channel as well as the support I have drawn there. The three areas of confluence would make massive support. So I don't expect us to come below the middle of that channel if we do drop that far, especially with the weakness we're seeing in our dollar. All right, finally, let me finish up this video with the Bitcoin chart. I said we've come down to visit or revisit an important trend line, and that we did today. All right. We touched this trend line precisely. And guys, I've had this trend line drawn for years. Where did this trend line come from? Well, I'm about to show you. Let's zoom out here to the monthly. And you can see that trend. Let's zoom into the weekly so you can get a more accurate portrayal of where I drew these lines. All right, so our first top, during the first cycle top there in April of 2021, is where I started this trend line. Then we had a second top, and that's really basically through the pivot top here of this weekly candle in November of 2021. I extended this out, and look, it became resistance. Therefore, I knew it was a significant trend line. Further confirmation came on this weekly candle. Typically, to break through these big areas of resistance, you need a lot of momentum. So we had that momentum. We came up, and then I knew it was going to be used as support. And over here, you can see it was used as support. This is before I spotted this head and shoulders pattern I'm about to show you. I didn't know it was going to turn into a head and shoulders pattern. But then over here in November, I believe, of last year, we tested that neckline precisely once again, just like we did today. So you can see it there above, a rather ominous head and shoulders pattern. Now, guys, this is not something to scoff off. 85% of the time, these head and shoulders patterns play out. Guys, I made the mistake during the last cycle top. For those of you who have been following me that long, you know I ignored a head and shoulders pattern during that time, much to my detriment. I made the mistake for you, so you don't have to. All right. That was a costly mistake. Ignoring that head and shoulders pattern, staying in the play cost me a lot of money on all charts, but specifically altcoins, which I was trading mostly at that time as well. So this is not something to be taken lightly. Keep in mind, 85% of the time it does play out. And if it does, I have a target down here of anywhere from 38 to 42,000. I know that seems insane at this point. Nobody believes that it could go that low, and it might not go that low. I mean, it doesn't have to go that low, but once it moves or breaks this neckline, if it does do that, we're going to go down. We're going to go down rather rapidly. Now, before it does do that, I would suggest that this trend line is rather significant, and because it is so significant, we should bounce. And actually, we saw that today. We hit that and then bounced. And where would we come up to? Well, there's actually two areas here. Give me 1 second because one of them is not drawn out. I'm going to go ahead and put up our VRVP, and I don't have it here. What did I do? Delete that? Give me 1 second, guys. Search it up. VRVP. I must have deleted. Oh shoot! Not only did I delete that, but the way that I had it set up has been changed. All right, what I really wanted to show you was that point of control, which is that white line there. So the price could bounce up to that white line, or it could come up even further to this descending red trend line before it proceeded further down. And now, if you see price hit one of those and start to move down rapidly, momentum is building, and we could definitely break that neckline. Once we do, that's the time to be cautious. I just want to give you guys a heads up, a warning about that. And now I'm going to go fix my VRVP settings since the video is complete. That's about all I wanted to say, guys. I hope you enjoyed the video and take those chart indications into consideration. Until the next video, peace, y'all.